What's up, everybody? Welcome back to another episode of Blazing Crypto Profits. So, in the last class, we covered red to greens. Basically, the stock that are up high the previous day and dip low just red a little bit and then go green for a continuation move. So now we're going to be covering green to reds, which means that we're going to be looking for stocks that were really having really bad down days the previous day. And then the next day, they get a little bit, they go green just a little bit on the day. And then they start to tank down and then the continuation continues, right? So let's look at some examples of what we were talking about for green to reds. All right, so this is QTT, right? This is a green to red here. All right, so this is what we're looking for when we're talking about a green to red, right? All right, so now this was like one of those kind of stocks that that run up intraday. They run up in the middle of the day. Like say for example, this stock opened here, ran up, flagged out, ran up some more, and then say this daily chart for this QTT was an all-day fader. Now this thing just popped up too, didn't it? So let's say this was an all-day fader chart, right? Basically, shorts are waiting to jump on this thing. So the shorts jumped on it and it started to take it down intraday, right? So then we had the market close here at 4 p.m. Then the next day, all of the longs think that this is going to be a nice bull flag, right? They think this is going to be a nice break of a downtrend. So it goes green a little bit on the day as it passes the previous day close, this yellow line here. But then it immediately slams back the other way. And then you get another slam down the other way. Now, this is not the typical, well, this is the typical. This is one of the many examples that you will see if you choose to master this setup, this red to green, this green to red. Stock goes green on a day, then boom, goes red. And then just fades all day. And this is what you call an all-day fader, because it goes down and it never really tries to come up and attempt to retest highs. It just downtrends all day, downtrends all day, downtrends all day. Right? Let's look at another example of a green to red. So like, how would you before we go, you would ask me, how would you capitalize on this, right? Well, as a short, as soon as it goes red, if you have a short bias on the trade, then you hit it red with a stop just above the candle. We'll stop just above the high of day, which is in my opinion the best stop you can have, because if it turns back around, then of course you don't want to be in it. But if it spikes around, chops around, and never breaks the high of day, then you're good. And if for your short, if you're gonna take it lower. But this is ideal. This is as perfect as you can get it for a green to red, right? There was just no bias here, no bias. Let's look at QTT real quick, because this stock just popped up on our radar. This stock just popped up on our radar a couple of days ago. Let me float this in a new window here, and then we're gonna look at QTT just to see, if it still has that all-day kind of fader chart. Let's put it on drill down. You can see the daily. Okay, so what day was this for QTT, right? That was wow, this is huge. QTT is a new stock, and it's pumping. This thing is pumping. Hands on your knees. Hands on your knee. Slide to the left. Hold on. So this is QTT, right? That was September 17th. Let's see. Let's take a look at it. Yep. September 17th. Let's look at September 17th on our daily chart here. 2018. Wow. So it was a brand new IPO then, huh? Look at that. It was IPO. Wow, look at that. And then look how this thing just developed over 2018. So this day it ran up, flagged, right? I guess it opened at 12 o'clock. That's amazing, guys. That's amazing. Look at this. So it just hit the market like around 12 o'clock. What chart is this? This is the 5-minute chart. Then it flagged, right? And then it didn't hold its gains. It didn't close at high of day. It closed mid-level. So since it didn't close at high of day, shorts had an opportunity to say, this stock hasn't really proved itself yet, man. Let's take this thing down, right? So, it flagged. It didn't close at high of day. Close here. Went a little bit green on the day, but it couldn't hold it. Slam! Let the boys be boys. This daggone, this thing be turning my camera off sometimes, man. So look at that thing. It just got slammed, right? Boom, and then faded. But this thing, look how this stock just developed, right? Look how this thing just developed, right? Boom, so now we're here, flag central. This is new territory, right? And this is the second day, second flag. Like this thing could bloop, 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 run. So this is definitely something to watch. I mean, shoot, I might just buy it and hold it. We got a nice breakout over this resistance level. It's brand new. It's brand new. Oh, this is that Chinese company. Chinese. Yeah, we were looking at this yesterday. I was trying to say the name. Q Tao Tiao. Q Tao Tiao. So I'm gonna find out some more stuff about this. But it's looking pretty good for right now, man. Shorts are covering. Initial bear flag. Flag. So we could look to take this thing back up to 20, right? Anything's possible. Let's check out something else. Let's check out some more green to reds. Stay on track here, guys. TNDM, beautiful green to red action. Ah, yeah, this is beautiful, right? So this is what I wanted to show you guys as like perfect green to reds, right? Even on the opposite way, all right, let's focus on this too. So a stock has been coming down, right? This one just gapped down the previous day, right? So it's short heavy. Longs are not interested in this. Nobody's interested in buying this. All the moving averages are on top, big weight on top of this thing, right? So what happens when the candle opens up? It tries to go green on the day just for a little bit, but then it doesn't. Can't. As soon as it goes red on the day, since you already have a short bias and you say this thing is going to go down, like this is your bear flag, right? You want to say this thing is going to break here. It's going to break this level and go down. So as soon as it goes red on the day, or as soon as it breaks your line in the sand, you hitting that thing. But you in it for the green to red, and you're in it for the short move. So say you got in it here, short, boom. You're taking it down, and this is the 5-minute chart. You're taking it down, and then you get out when it breaks. As soon as it breaks your moving averages, because when it starts to break the moving averages, you don't know where it's going to go. But as long as it's under your moving averages, you can say that this thing is going in the direction on the opposite side of the moving averages, on this side of the moving average until it doesn't. Right? And then you can also have a signal that the trend is over when you start to get these wicks on the opposite side. When you start to get wicks coming up, that means that buyers are taking it up. So if price is coming down, right? Say I'm a buyer. Say I'm a buyer, right? And then price is coming down, like raining, right? Price is coming down, so I'm a buyer, like I'm sitting on support, someplace that I think is support. So as soon as it comes down, I'm like, I'll take some, take some, and then more come. And then so the candles, when they close, this is how the wicks look. This signifies buyers. And you can also imagine the same thing to the upside. When a stock is going up, you got your sellers. Sellers want to be at the top, right? Sellers want to be at the top because they want to sell it when the price is high. But buyers want to buy when the price is low. So your sellers are going to be at the top, and they're going to be like, so when price is coming up, they're going to be looking at it like, yeah, all right, here it comes. Sell. Sell. And then that's what's going to create the wicks on the top part. You see that? Look at this wick right here. See? Sellers waiting at the top like sell. Right? And then the buyers are like, okay, buy. You see? Coming down, buyers still buying it up around here. So that's a good indication that there's a strong presence of buyers, and that's probably the end of the trend, and that you probably want to go ahead and get out. That's huge. So that's your green to red, man. If you don't understand this guy, just pause it, run it back, internalize this thing, internalize it. Let's go ahead. That was TNDM, beautiful green and red. And yes, it was. This is ALLK, green and red. Look at this, guys. Perfect, guys. So this is what I wanted to show you guys. Look at this. Big down day the previous day, right? Big down day the previous day. So if we're short sellers, we're like, all right, I might be looking at this for a green to red tomorrow, man, because this thing cannot come back from this big tank action right here. It just broke a nice line in the sand. See, it broke that yellow line. It just broke a nice line in the sand for us. And it just cracked this level right here. Man, I'm going to be looking at this thing for a green to red tomorrow. You come intraday on your 5-minute chart. Look at this thing, right? Consolidate all day. Put your little line in the sand there. Let's see if I can do a little line in the sand for you guys. This doesn't work. How was I doing it before? Oh well. So boom, you got your little line in the sand. Boom, what happens here? Look at this, guys. Can you see this? Stock tries to go green. Tries to go green on the day. Tries to come up here, right? Go green. Boom. Can't make it. Can't make it. As soon as it gets slammed, as soon as it starts to go red on the day, you hit that thing short with a stop just above this area, just in case it comes back on you, right? Because none of this stuff is guaranteed to work 100% of the time. No strategy is guaranteed to work 100% of the time. It's just too many variables you have to deal with. Too many variables. So look at this thing, right? Boom. You hit that thing red. You hold it until it starts to break your moving averages. In this case, you would have been holding from what? 37, 38 till about maybe $30, $32. Come on, that's a good $7 gain. 100 shares of that cost you $3,000 investment, $700 in one day. You see what I'm saying? That's huge, guys. That's huge. So that's a nice green to red in convergence with the bear flag setup, which we're going to get into down the line. But let's just focus on this green to red. And this is an opening setup. So you don't, like I said, in some cases you can hold it for the whole day, but say for our strategy, we have reasons to sell. And our reason to sell would be if it breaks our moving averages. That's it. So it's not that we can hold it, we have to hold it only for 10 minutes or 5 minutes at the open, but we can hold this thing all day if it doesn't break our moving averages. The only thing is, can we be patient enough to sit and wait for this thing all day long? Because sometimes you could be in a stock, you be like, man, I'm tired of watching this thing. You know, I'm just going to take profits right here. You know, I'm put a buy stop here. I'm going to go do whatever I got to do because you already made 500. And you want to watch it for another 200 or maybe another 50. You never know. You see what I'm saying? But, you know, that's just something that you'll have to deal with if you decide you want to be a trader. So that's a beautiful green to red. Went green and went red on the day and continued down. That's a good short setup. That's a good way to make money on stocks as they're going down, as the price is going down, while all the people who bought it just wanted to go higher. They don't know. Oh, it's cheap, it's cheap, it's cheap. But you and me, we smart, so we be like, nah, man, that's a bear flag, man, and this thing is going to crack. Now, we didn't get into the bear flag setups yet. Just know that this is green to red. You could be like, I'm looking for a green to red. I'm looking for a green to red in this thing. Because if it went down the previous day because some CEO sexually assaulted his secretary, then you know that company is going in the dumps. So you want to be like, all right, man, I'm looking for a green and red on this thing so I can short this puppy because that news was too bad. Ain't nobody in their right mind gonna buy it. And all the buyers get crushed while all the short sellers are making money. And you even got the people in the company, I believe people in their own company is short their own stock sometime. Because they know it's going down. People do that stuff. All right. That's ALLK, guys. Let's look at TNDM. Dang, we looked at TNDM once. TNDM must have gave us another one. So this is TNDM, right? Crack this area right here. See that big down day right here? Tried to bounce back a little bit. So we want to look for green to red. We want to look for a continuation to the downside if we're shorting. Thing goes green on the day just a little bit. Thing goes green on the day. Boom. Can't hold the gains. As soon as it goes red, like my own teacher says, it's a function of price. This little puppy here. You see it go red by 1 penny. That's what he says. But I think that you should look for a setup. You should look for, you should at least wait for a candle to hold. Wait for a candle to hold. And then if it gives you this shape, this pattern, breaking the level and going red, slammed like that, then you go ahead and get in it. You'll probably end up getting in right here. You see? And then you want your stop to be here. You see what I'm saying? And then as it continues downward and gives you and lets your moving average come down, then you want to start to adjust your moving average, right? Adjust your moving average. And we'll probably be holding this thing to right here. See, so some of them are not perfect, right? You probably be in here, be in that 40, 41. None of them are perfect. But this is what technical analysis is all about. You know, like I said, like my own trading professor says, stocks are like people. You know, nobody's perfect. Nobody's perfect. And these stocks are going to move however they move. You see? So we just have to be able to identify how a person's moving or how stock is moving. And then, you know, base our reaction to the situation off of that. You see? So if a person is going in our favor, you know, is working, like say we got an employee and they're doing their job good, nice, thanks. We can work with that. We can work with that. But as soon as they change their moving average and be like, and start to go the other way, start stealing, you know, start coming to work late, we got to cut our losses. We got to be like, hey man, you know, you're not the same person you were all this time. I think we're gonna have to let you go, right? Then you let that stock go. So that's huge. That's hot. That's TNDM, man. Let's look at CYH. CYH. Look at this multiple red to green. Big down day the first day. So you want to be looking at, you want to see if this thing is going to come crack this level, right? Right? Look at that. Boom. Green to red. Green to red. Boom. Goes green a little bit, then slams. Goes green a little bit, slams. This one didn't even get the chance to go green. It just continued. But look at this one, right? Went a little bit green on this day. Couldn't hang. Cracked this 50 moving average right here. Then flushed. You're in it. As soon as it cracks, as soon as it goes red, or as soon as it breaks your line in the sand under these levels, boom, you're in it, and you're holding it till it breaks your moving averages. Boom, next day. Tries to gap up a little bit, tries to go green. Shorts are like, nah, man, the news is too bad. This stock is going down. So what they do? They put in another short position on it. Bam! Holding that thing when the price is going down. You see? And see, the beauty of shorting, I think, is that, you know, what they say is that stocks take stairs up and they take the elevators down. Stocks go down faster than they go up. You want to know why? Because you have people that's holding the stock, they have stop losses. They have stop losses. So it's like a domino effect. When one stop loss gets hit, the next one there is going to get hit, and the next one is going to trigger that flush. Stop losses for people getting out. You see? So we're going to get into stop losses and stop limits and buy losses. Buy stops and buy limit orders and all of that stuff in the risk management portion of the class. But let's just focus on the pattern for right now. Right? So thing goes green on the day. Boom, rolls over. Then flushes. You probably be in it at the break of this level, and you're holding until it breaks your moving average. Now, this one would have stopped you out. This one would have stopped you out. But if you had, you know, this stock here at, you know, say you shorted at $3.15, you can have pretty much a lot of shares of this thing, right? You got maybe 1,000 shares of this thing, right? And then if it goes down 20 cents, that's $200, right? You see? If it goes down 10 cents, that's $100. 15 cents, $150 on a 1,000 share position. Right? Look at this. Stock's coming down, goes green a little bit on the day, flushes. See, this was day 2, day 3 of October. Now, this October is when a lot of stocks start rolling over. Started rolling over this year. And if you look at the past history, you know, you see a lot of stocks had started to roll over. Like, check out this thing right here. Look at this, October. See that line? Boom. The Nasdaq tech stocks. This is the ETF for tech stocks. This is the general market for tech stocks. Started to roll over in October. Before that, you see, so you can do your history if you've been searching around the charts. Check it out. Look at this. This is the S&P 500 general market. Stocks start rolling over in October. Boom. IWM small cap stocks started rolling over in October. You see what I'm saying? So that's huge. You know, that's huge. Let's look at some more stocks. Look at some more charts. So that was COIS. Let's look at TXMD. What is TXMD? Look at this thing, right? Nice little down day the first day. Second day, flush. Look at this right here. Green to red. Little bit of a green to red. It already gapped down. Green to red definitely right here, right? You can see this thing probably went up a little bit. Sellers came in like, nah, man. Boom, and it flushed it. Look at this thing, right? Try to go up, try to go green. Sellers came in, flushed that thing. Remember? Sellers waiting at the top right there. Bam, I'm hitting that thing. As soon as it goes red on the day, you join in on the short. As soon as it goes red. Now, the candle is it's not gonna be like this at first. It's probably gonna start little, shake up, go green a little bit. It might do this 20 times before the minute is over or the 5 minutes is over. Boom, boom. Then you'll see it right here, dancing around, dancing around, dancing around. This is why I like the 1 minute chart. You know, 5 minute, you don't see what's going on. 1 minute, you'll probably see it going up like this and then roll over, make a little arch and then come down. But see this one, you see like it'll roll over, like make a little arch and come down. You'll see that on the 1 minute. On the 5 minute, it'll just be one straight candle going up and down. You don't know what the heck is going on. But in any case, you want to be prepared for the green to red. So you want to know that if you have a big down day the previous day, most likely you're going to have another big down day after that. So stock goes green a little bit. Boom. Comes red. You in it. Probably with the break of this level. And you holding it until it breaks your moving average. You could choose to hold until it breaks the 50 moving average. You can choose to hold till it breaks your 20 moving average. You see what I'm saying? Because a lot of people may say, man, well, I could have, if we would have held it on the 20, and that's what you're going to do. As you look at charts, you're going to say, man, if I would have bought it here and then held it and then not sold it here until it broke this line, then I would have made this amount of profit. And then what's going to happen is you're going to see these kind of things over and over, and then that is going to give you your own style. That's going to give you your own style when you see these things happening over and over. You see? Like, oh, when I see this, when I see a big pole like this and then it starts to go sideways a little bit and then it breaks over the pole again, it usually goes up again. I mean, when it breaks over resistance, it usually goes up again. Oh yeah, that's a flag pattern. Oh yeah, I like that. I like that. You see? Oh, usually when it doesn't have a big down day, it usually goes up just a tiny bit and comes and then slams back down. I really like that, especially since stocks take the elevators down, they go down faster than they go up. I can get my money fast. You see what I'm saying? Let's look at another chart. That was TXDM. Let's look at KPTI. This is KPTI. Stock had big down day the previous day, right? Big down day the previous day here. Tried to bounce a little bit, right? Try to bounce a little bit. Then look what happened. Try to go green. Shorts are like, nah, man, we right there on top of that moving average. We waiting on top. We waiting at that moving average. As soon as you come to that moving average, we shorten you. As soon as you come back to your moving average, because that's resistance now. So stock pops up to about the $17 area. Right there, that non-moving average on the daily chart. See, this is the daily, and then this is my 5 minute chart, right? Boom, shorts waiting right there. Can't make it. Bam, get slammed. You in that puppy short, right? Then it starts to put a level right here. This is your bear flag. Now, we didn't get into these yet. Don't worry, but this is your bear flag. Boom, as soon as it breaks this level again, another setup to get in it. Another short. Boom, and you're taking this thing down. Woo, it's about to get real fun, guys. But look at that. Beautiful. Green to red. Pause that. Put that in your phone. Right on your screen, green to red. Beautiful. Beautiful. Let your brain absorb these patterns. Let your brain absorb these patterns. Beautiful. That was KPTI. Let's look at CDNA. CDNA stock had a big run up out of a bull flag on the daily chart, right? Some swing traders, right? Some swing traders was like, man, I'm in this thing for the gap, right? I'm holding it. Never broke my moving averages on the daily. I'm holding it. Boom, big spike up, right? Whee! Let me see something real quick, guys. Look at this thing, right? So short start taking profits up here, right? So everybody's trying to get out. Then the short sellers are like, oh, hey. Now the real professional short sellers are probably like up here, right? On this day, like I'm shorting it right here. But if you're newbie, you want to be safe, right? You want to be like, okay, as soon as they break these moving averages, I know it's coming down. So you won't be shorting here, trying to short here, trying to short there, blah, 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 right? Trying to short here and get squeezed a little bit. You want to be like, as soon as it breaks these moving averages, I'm definitely shorting this thing, right? Oh, look, you got a convergence of setups right here. You go intraday. You got your little wedge. Boom. Tries to go green a little bit on this day. Then cracks your line in the sand. You're in that puppy. But what happens? Trickles around a little bit, trickles around, right? It's got to shake the rest of the longs out. Then everybody, all the rest of the longs got to give up on it. Then what happens? Boom. You get the flush. You get the flush. The holy flush. Boom, until it breaks your moving average. Oh, it's so sweet, ain't it? Dang, that's sweet. Pause that. Take a picture. It'll last longer. Let's see what else we got. ARQL. This ARQL, big down day, broke this nice line in the sand right here, right? Just had a big run up out of a nice bull flag. Remember that? Short sellers longs was in this thing from the break of this line, right? It was holding it until it starts breaking their moving average. They're ready to take profits now. They're like, man, I'm out of this stock now, man. Ain't no telling what the hell's going to happen with this thing. So they get out prematurely, right? So what? Then it goes up some more. Don't worry, because you can be in another stock, right? It does all this crazy stuff. Now, short sellers are still watching this thing because it's got to come back down, right? What goes up must come down, right? Well, maybe that's not true, right? Maybe that's not true. Let's erase that from our category, right? What goes up does not have to come down. Oh. Thanks. Nice wife of mine gave me some fruit from Guyana. So, stock cracked that line in the sand. So what do we say? Man, as soon as it cracked our line in the sand, right? Short sellers want to be in that thing short, right? But we not swinging short. We just catching the day moves. We catching the first couple of moves. We're looking for this every day. If we're short sellers, we're looking for this kind of scenario where it's a level that's been building over a couple of months. Then when it breaks that level, right, we're going to look for a green to red. We want this thing to just go green a little bit, just a tiny bit, and then get slammed and go red. Sorry. We want that thing to get slammed. It's so funny because, Kunal, he be doing that, man. And I feel the older passion, man. And I totally understand why he do that. But maybe some people might not understand. This is it, man. This is what we do. It's fun. Look at this. Man, wait till you guys hear what I got. Wait till you guys hear what I got planned for the world. Oh man, this is crazy. So thing goes green a little bit, right? Gets hit, runs right into the moving average. Short sellers are like they waiting on it, like they're sitting on top of the bench. Like as soon as it comes up, bam! That's what they ready to do. Punch it right back down. Boom. So you in it. You in it for the green to red as a short. You know, you get in there with 100 shares, right? You get in there, you short 100 shares. All you try to do is catch a dollar. If it goes down a dollar, you taking that a dollar move. You got $100 for the day. Just like that, on the click of a button. After months and maybe years of studying and getting this thing down packed in your head. Don't expect to understand this right away. Don't expect to understand this right away. Do not. You'll be fooling yourself, man. Anything. You know, you want to treat this thing, Tim Sykes and other people say, doctors or lawyers. I think you should treat this thing like a pilot. You treat this thing like a pilot. A pilot is not going to get up in the air. He's not going to get up in the air and on his first day and then try to be like, hey, I'm ready to fly. Even if he's got somebody there to fly with him, he's going to get on that simulator. He's going to be reading books about his planes. He's going to study his plane. Basically, in this case, we'll be studying our trading platform. You know, he's studying everything. He's studying the air, how the clouds move, why it pushed the plane, how much fuel he needs, and all of this stuff. That's how you got to treat this thing. Treat it like a pilot, right? So don't worry, you're not going to understand it at first, but if you do, more power to you. Maybe I'm a good teacher, right? Boom. As soon as this cards come up, runs into this moving average on a daily, boom, and then just gets slammed. You hit that thing. You can hit it when it breaks this level, right? With a stop just above this level right here. Manage your risk accordingly. Boom. Then you got a convergence of setups. You can hold that thing all the way until it breaks your moving average. You'll be holding this thing all the way down here. So you shorted it up here, maybe 475, 100 shares. You getting out at 425. That's 50 cents right there. That's a 50-cent move. 100 shares, that's $50. 200 shares is $100. 1,000 shares is $500. See what I'm saying? That's hot. ARQL. Beautiful. Green and red. A little bit green. Goes red. Let's see. We got a few more to run through. Gazaz and gals. That was ARQL. Let's look at IMGN. Now, see, this is what I wanted to show you to the long side. These beautiful red to green setups. I mean, green to red setups. I wanted to show you that to the long side, red to greens. You can just basically flip this over and it'll be red to green. If you want to look for red to greens, that's what you look for. Right? But these green to reds are perfect. I mean, these things are perfect. Look at this. Nice level forming, right? Cracks that level, right? Or it's sitting right at the level. So the next day you did your nightly scan. You like, I maybe want to watch this thing for a green to red. I may want to watch this thing for a green to red because that's all you do. You got your monitors out, right? you got your monitors. You want to be like, okay, I got 4 green to reds right here. Then I got another 4 stocks I'm watching for green to red right here, right? Then you just put that thing on your watch list, man. And then as it's coming down, as it opens, you just looking like this. Okay, what's it gonna do? What's it gonna do? Okay, yeah, that one's coming down. Hit it, bam, boom, stop it there. Another one going, bam, stop it, boom, right? So you're in that thing until it breaks your moving average. Look at this beautiful 5 minute 20, right? I might have to start using the 5-minute chart again, man. Maybe. I like my 1-minute chart though. So this is a cool setup. Now I would say it takes guts. It takes guts to come in here and do this. Not even just guts. It takes confidence, courage. It takes, the main thing I think is conviction, man. You gotta, to do this setup like this, you want to practice this thing, man. You want to have seen this thing at least 1,000 times. You want to see it at least 1,000 different times, right? And back traded it in your head maybe 1,000 different times before you try to put some real money on the line on this thing, man. I think that maybe with every setup, right? To really get that conviction. Like, at what point does a person get conviction? At what point does a person obtain conviction? That's the question, right? That's the question. All right, that's IMGN. Last one, PDD, man, PDD. So this is PDD, right? Tried to flag up, failed, right? So longs are getting out of this thing. It's breaking moving averages, right? Right. So shorts are like, hey, we just broke the movement that had a big down day the day before. Let's look for a continuation. Stock opens up, tries to gap up a little bit, right? Shorts ain't worried. Boom. Starts to roll over a little bit in the first 10 minutes or so. 5, 10, 15 minutes. 20. Breaks lows. Boom. Goes red. As soon as it goes red right here. As soon as it breaks your line with the previous close, it's continuing. It's going red even more. Right? You hitting that thing. You in that thing. Short. Stop right above. You can put your stop at the high of day, or you can put your stop at your nearest moving average, which would be the 20 moving average. For in this case, now you can at this time I wasn't using the non-exponential moving average intraday because you get stopped out too often, and I'm even experiencing that now. That non-exponential moving average, it gets pierced a lot. So you want to judge that. Like, should I put my stop along my 9? Should I put my stop along my 20? But I'll share my strategy with you guys when we go into the risk management class. Maybe I should start doing risk management class first, huh? Maybe I should do a survey, man. After this whole thing, let's do a survey and say, if you watch all the classes, do you think that we should do the risk management class first and terms and terminology, or the patterns first and then cover risk management? You let me know. Right? So in any case, we're in this thing until it breaks our moving averages, right? That's what happens in either case. So that's it. Green, tries to go green, rolls over, goes red, flushes down, and then you're in it. I mean, it's that simple. I mean, I can't make it any simpler. Goes green, it's going up in price. Then it can't sustain that, starts to roll over, go red, and then since you already have a previous bias on it, since you're looking at the chart, you know that when it starts to break their moving averages, I mean they're going the other way, right? So it was going up on the daily, because this is where we get our ideas from. Remember, we get our ideas from the bigger picture. So once it starts breaking those moving averages on the daily and negates our pattern, we can start looking at this thing short. So what happens? Comes up a little bit and starts to roll over, go short. You in that thing. You could be in that thing at the break of low of day, this candle, boom. Or you could be in the break of this level right here, boom, or a break of this level. You see, as we map out our support and resistances on the daily chart. And then look what happens. You get the flush. You in it for that move. That's hot. So guys, that's about it, man. Short class. I mean, I can't really make it any simpler, man. Wish I could give you guys some tips and pointers, but you're just gonna have to wait till the next class. So I guess the homework you could say is go ahead and look for some green to red. Look for 10 green to reds. Build your own slide like this. Try to build a slide or something, so you can have a visual representation of your green to reds. Look for 10 red to greens from the past. From the last trading day, red to green setups from the last trading day. Look for 10 green to reds from the past. Green to red setups from the last trading day. And if you have any questions, about how to find these setups, leave a comment. Leave a comment. I'll answer it, man. I'll answer it in the comments. Leave your phone number. I'll text you or something like that. I'll call you or something, or I'll just respond to your comment in the comment box. Or I'll make a specific video for you. All right, hit me up. That's about it, man. I really would like to go over some charts with you, but this class is done. And let's see. Let's just look at some real quick. I'm gonna find maybe one or two. Right? Let's go to market mix. No, let's go to back to drill down. Tab that in the main window. Tab that in the main window. Go to a 5-minute chart. Try to make things a little bit cleaner. So this thing gapped up, right? So we can't say that's a green to red. Look at that nice breakout though, right? Right at the end of the day, last freaking 10, 15, 20 minutes. That's hot. Let's see if we can find something. TMSR, this was nice, man. Last this Friday. Nice. That was nice. All day fader chart. So we want to find a stock that was up big the previous day. Like if we're looking for a green to red. I mean red to green. Try to find something that was consecutively going up, right? I mean, so look at this one, right? The stock is coming out of a flag, bouncing off the bottom, right? WFT, right? So it's coming out of a flag, and then it kind of came down a little bit, flagged again a little bit here. So we could be looking at this thing for green or red. As it breaks this line, right? You could say, all right, boom, right? If stock is going to open up and close below this thing, then you know we want to be in it. Or we could say if the stock if the stock opens and it breaks our line, then we want to be in it. So we go like this, right? Put an alert on the line. Boom, and then we get an email or something, or we got the little Google Watch, the Android watch, it'll send us an alert if we're sitting in front of our charts that day, or like if we were ready for it. So what happens here? Stock goes red a little bit on the day, right? Stock comes down, dips red a little bit, then goes green. Let's look at the 1 minute, see what really happened. Right? So this is at 4 p.m. Let's see, this is 4 p.m. the previous day. So what happens? Stock opens up here, right? Opens lower. Still in that little range, but then you got your non-moving average right up under it too, right? So that's what scoops it up. So stock just goes red just a little bit from the open there, right? If this is a green candle, it opens here, and then it closes here, right? The next one, open here, close here, right? The next one, open here, went down a little bit, probably went up a little bit, closed at mid-range, right? Next one, open here, close here. Look at that. Now you're going to be watching this thing. You're going to be watching how these candles move in live action. It's easy to look at these pictures and say, oh, yeah, this is it. But you want to see this thing. It's going to do it just a little bit. Boop, boop, then go up. In our case, we want to get in it probably when it breaks this line in the sand. You want to get in when it breaks the line in the sand because you don't know if it's going to go bounce up. And then you also want to give your moving averages time to catch up. So this is thing to practice, but you can see it went red on the day a little bit, and then immediately turned around and went green. We're in this thing with a stop just below, and watch this thing go higher, right? Let's see if we can find one more example of a red to green. That was a gap, INFN, that was hot. Then close at 516. Gap. All right, look at these, right? This thing just doing all kind of red to greens, consecutive. It was up big the previous day. So we can say the next day I want to watch this thing for green to red. I mean red to green. I want to see this thing go red just a little bit and then immediately go green. Right away, right? So what happens here? Well, this was the previous day. Hold on, Doogie Duke. Hold on, Doogie Duke. All right. So what happens here? And it never goes past the previous day's close. But in any case, this is close enough. It's close enough, right? Then gaps up a little bit, comes back down, goes just a little bit red, just a little bit. Even here, you can see that little wick right there. My bad, my bizzad. Look at that, guys. It's huge. This is 4 p.m. So boom. Look at this. Let's look at the 1 minute chart. Right? Close the previous day, went red a little bit. And starts to go green on the day. Boom. Went red just a little bit, back into this little range from the previous day. Since it was up big, right? The previous day. For that, that's huge, right? And it comes down, goes up even more. Floop, 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 floop. But it all starts from the red to green. Goes red a little bit, boom, and then the longs get up in that thing. Boom, comes down, tests it just a little bit again for the retest. It holds. So longs have confirmed this thing now. Oh, we're trending up, then it breaks over your VWAP. Boom. And you got that just continuation for the next 30 minutes or so. So that's a nice green to red, right? I mean red to green. Now let's see what happened the next day after that. Right? It was up big, right? Now, I say it takes a lot of skill to look at these 1 minute charts. I know what I'm looking at here, but you guys might not know. So let's go to the 5 minute chart just to make it a little bit more easier. So this thing also, it didn't really dip red, but this is close enough. This is close enough for a continuation play. That's all we're looking for with red to green. It's even better if it doesn't go red. If it just continues up from the previous day, then we want to be in that thing, you know, for the red to green. As soon as price is at 1 penny, green, 2 pennies, 3 pennies, 4 pennies, 5 pennies, and we got a previous bias saying that this thing could continue up, we want to be in that thing. Now, I'm telling you, man, it takes courage to get in there early morning like that when those candles are flying around. It takes courage, but, you know, another thing is that what they say, like, you know, ignorance is bliss, right? So this might be another level, right? So Monday, right, this thing's going to come out. It could dip red a little bit, or it could open up and keep going up, just like it did these past 3 days. It could do it again. So that's something we got to be mindful of. Something we got to be mindful of. But, I mean, look at this thing. High and tight. It's flagging, right? Just like we see on the daily charts. Makes a flag. We want that thing to break out. But we're going to get into the intraday flag class. This is my personal favorite. Well, I want to take a picture of that. That's nice. Oh, man. And then you can also look at the same thing for green to red. So, like, you could go take your percent gainers, hit percent, and then it'll turn into all the top losers. Then you go and start looking at your top losers. And you can see a stock that was down the previous day. So, like, we could be looking at this one right here for a new green to red, right? We could be like, all right, so if you watch this video today, I want you to do this experiment yourself. Do it on simulator though. Don't do it in live cash. I don't recommend everybody put any money on the line unless you feel comfortable and you're doing it at your own risk. By watching this video, by clicking the play button on my video, you acknowledge that I'm not a financial advisor and that this is just for pure educational service purposes. It's a pure educational purpose, and you are at liability of your own self for pressing the buy and sell buttons. I'm not telling anybody to buy anything. Well, I want you to see if the examples I show you match up with this thing, right? We can look at the news, right? We'd be like this. Let's see. This is MATW. So we'll be like this. We'll come here. MATW. right? And we'll see what the news was just to check it out. So 15 hours ago, this was yesterday, edited transcript of MATW earnings conference call, right? So look, they put out earnings. They had bad earnings. Basically, they're saying the company didn't make any money. Or the company might have made money, but it made just a little bit less than what everybody thought it was going to be. Or their earnings was less than their revenue. So the company didn't make money. So I mean, just by a little bit, a couple pennies, right? But you know, you can save that stuff for the quants. We just want to get in on the chart and the patterns. We want to capitalize off the patterns. So we're going to be like, all right, this thing had a big down day the previous day. We want to see this thing maybe pop up, run into our 50 moving average right here, and then go red on the day, and then we hitting it again for a green to red. It's a perfect example of what could possibly be a green to red. That's worth checking out. So that's one. You can put that in your box. All right, that's one I'm watching. Boom, big down day, no volume, no, right? Look at this one, did a green to red, right? See? Stock had a big down day, went sideways. Next day, February 1st, tried to go green on the day just a little bit. Boom, hit that moving average. Shorts came in on top, like, yeah, we waiting for you. Boom, crack your level. You can be in it right there. Or you can be in it as soon as it's rolling over. Get in it at close to resistance as possible. You want to get in as close to where your stop loss is going to be as possible, right? As soon as you get that thing to hold and it starts to break your moving averages, that's when you want to be in. Because that means that it's on the other side of the moving averages now. And then you want to get out when it starts to break your moving averages in the opposite direction, like about right here. You want to get out because you don't know if it's going to go back up. But in any case, you're in this thing to the downside, especially small shares like this. I mean, small price like this, you get more shares for your small account, and then you can capitalize off of the move. You know, 2,000, 3,000 shares, you know, or something like this, and then you get 10 cents out of it. That's $300, 600, 900 bucks. You know, something like that. So check this stuff out. Check this stuff out, guys. I mean, this is amazing, man. And yeah, guys, that's probably gonna be it. So I thank you for watching. This class was fun. This is how I wish the green to red class went. I mean, the red to green class went, but you know, we just have to take this thing one day at a time, and you have to just go with the flow, be formless like water. You know what I'm saying? So that's it. Peace.